Welcome back to another video here on the channel in which we cover the Messari Crypto Theses for 2022. I already published a video that was specifically about Bitcoin only, so in this one we talk about the top narratives and investment theses for the whole crypto space. From market infrastructure, NFTs and Web 3, DeFi 2.0 to ETH Layers, bridges, DAOs, IPOs and ETFs. There is a lot of information in this 164-page report that Messari or Ryan Selkis created, so I can only give you a glimpse in this video. If you are interested in the full report, the link is in the video description. Let's start with thesis number 1, the collapse in institutional trust. This is an obvious one for anyone already involved in crypto or Bitcoin specifically. Transitory inflation that is not transitory, continuously rising public debt, and the melting ice cube that is fiat money. Media and Congress distrust is probably reaching all-time highs around the world, with the US powerhouse scoring really bad across the board. Maybe you're one of the 70% of Americans who disapprove of Congress and no longer trust policymakers to do the right thing, given that they spend recklessly and insider trade with impunity. You're looking for an alternative to central planners in DC and Beijing. For you, crypto is an exit vote. This Andreessen Horowitz graph displays what many people think. Government incompetence and unethical behavior, with the media not looking much better either. Thesis number 2. Crypto or Web 3 is inevitable. Web 3 is what VC Chris Dixon calls the internet owned by the builders and users, orchestrated with tokens. I still remain highly skeptical of this take. Of course, decentralization is what we all want and what I want as well, so this would be quite wonderful, but I still don't think that tokens are the way to go here. I simply don't know if token economics and VC money pumping projects to receive ownership is really the way to go. But Balaji, you don't need tokens or all chains to decentralize Twitter, just decentralized IDs plus personal app data stores, both of which are components Block is investing in. The argument isn't against decentralization, it's against Web3's unnecessary VC enriching shenanigans. However, I do believe that crypto is here to stay and that we won't have a Bitcoin-only world. Individual projects will tend towards zero against Bitcoin, but if you combine all the altcoins in existence and all the ones that will exist in the future, Bitcoin's market share compared to that is probably still going to go down. You can like that or don't. I'm sticking with Bitcoin as it solves the most important use case and does it so well: money. Ryan also says that hyper-Bitcoinization and crypto's permanent ascendance at this stage of our development would only happen against a very dystopian backdrop indeed. And I totally agree with that. It's way too early for hyper-Bitcoinization and the world would need to fall apart somewhat to get to this stage right now. But even then, Bitcoin would probably not be the go-to choice for almost anyone, as it's still a risk asset at this stage. Patience, everyone. Thesis number 3. Bridges, NFTs and DAOs. Web3 is a good all-encompassing term that captures cryptocurrencies, digital gold and stablecoins, smart contract computing, layer 1, layer 2 platforms, decentralized hardware infrastructure, video, storage, sensors, etc., non-fungible tokens, digital ID and property rights, DeFi, financial services to swap and collateralize Web3 assets, the metaverse, the digital commons built in game-like environments, and community governments, DAOs or decentralized autonomous organizations. Well, I don't know for sure. I think digital gold and stablecoins don't really fit into the Web3 category, but let's continue. I expect growth everywhere across Web3, though 3 areas are particularly underdeveloped: NFT infrastructure, DAO tooling, and inter-protocol bridges. I agree with that one. The NFT bubble will probably grow much larger before bursting. DAOs are interesting for many reasons, albeit not perfect, and inter-protocol bridges are popping up either way, with Ethereum hitting capacity and alternatives like Solana popping up that focus more on speed with the downside of higher centralization. All of these new blockchains plus Ethereum's layer 2 rollups will need to talk to each other, so the most acute pain point in crypto today may be the lack of bridges. If the future is multi-chain, then those who build better cross-chain connectors and help move assets fluidly across parachain zones and rollups will inherit the virtual earth. What Ryan also talks about here is that individual NFTs are in a bubble, but that NFT tooling in general is still largely missing. Marketplaces, financialization primitives, creator tools, community-oriented business models, and decentralized identity management or reputation management systems are all in their infancy. That core infrastructure will be one of the hottest areas of investment in 2022. Thesis number 4. The decoupling of cryptos. What's meant by this is that not everything is seen as a cryptocurrency anymore. There are more categories at this point, from DeFi apps to distributed computing platforms, NFTs, and of course digital gold. And let's not forget about the most important category of them all that Ryan misses here: dog coins. Yeah, in my eyes it's mostly still about quick gains in cryptoland, whether you bet on meme coins or on other baskets. But the silver lining for crypto enthusiasts is that some of these things find a gradual adoption outside of pure speculation, which is the only way to make them relevant in the long run. It's the same for Bitcoin. Without the hodlers and those who pay and earn with Bitcoin to foster a circular economy, it's just speculation for higher fiat gains, which is my least favorite use case. Thesis number 5. Permanent venture capital in, up and down, never out. The dedicated crypto funds have seen record new capital raises and record AUM from the appreciation of their core holdings. Some of the funds, looking at you Multicoin, are likely among the best performing investment firms of all time, which makes it easy to see why the group has had no trouble continuing to rake in cash. Unsurprisingly, next to retail investors, the institutions of course want to jump in to enjoy some of the gains. What Ryan suggests here is that capital moves towards higher risks during bull runs, but doesn't necessarily cycle out besides taxes. Instead, it moves towards the big ones like BTC and ETH. According to Dove metrics, we saw $8 billion of private investments across 423 deals in Q3, nearly half of the $7.8 billion invested since the start of the year, which was already more than the previous 6 years combined. Nearly 90% of the largest deals in crypto's history have happened this year, and that's excluding the Coinbase direct listing. About 75% of the funding was deployed into infrastructure and centralized services, and that was before the FTX and DCG announcements and potentially imminent Binance funding announcement. The institutions are actually here this time. Thesis number 6. How high can we fly? No one can predict when the next crash will come. Bitcoin and crypto has historically moved according to the Bitcoin halving cycles. However, there are theories that suggest shortening of the cycles and those that suggest lengthening of the cycles. I think you can argue for both, and I simply have no idea about any of the price action, so I don't think much about it. Maybe the top of the cycle was already here, maybe Q1 moves Bitcoin past 100k, who knows? Ryan shares his indicators for the next market top in the report. I'll give you the one for Bitcoin as the rest follows BTC sooner or later anyway. The king has no real rival. As a monetary asset with no earnings, it's an asset that is priced versus valued, which means it's almost always judged on a relative basis to its analog cousin, gold. Ryan is looking at market value to realized value, MVRV, which you can check on Coinmetrics or Glassnode. If you don't want to hold through a bear market, you should think about selling at an MVRV value of 3 and buy as much as possible at an MVRV value of 1. While I'm making this video, we are pretty much exactly sandwiched in the middle at 2. I also find the following interesting when thinking about if we already saw the top of the cycle. In 2011, MVRV stayed above 3 for 4 months. In 2013, it was there for 10 weeks. In 2017, 3 weeks. Earlier this year, it was 3 days. The shortening is obvious, but 3 days seems really short in relation to the rest. Thesis number 7. Surviving winter. Let's be honest, the next bear market could be quite brutal. A regulatory nightmare paired with some nice energy and illicit activity FUD. Well, maybe it's not that bad this time, because actually all the previous 6 investment theses we covered so far will likely remain true. It's ultimately about lowering your time preference. If you survived one winter, you will be able to stomach the next one. If you remain confident, put on a helmet, embrace the cold and take heed of these winter survival tips. Unwind leverage early, cash out tax obligations when incurred, but for the love of God, do not try to time the top. Thesis number 8. Public options. Coinbase opens the floodgates. As impressive as Coinbase rise to $70 billion has been, it has barely kept pace with Bitcoin as an investment since the company's Series B in 2013. It's important to notice though that these IPOs and maybe coming ETFs strengthen the narrative that Bitcoin is not a fad and is here to stay, and more people are able to access the space. The B2 ETF was a great example of this success story. The B2 ETF was the fastest ever ETF to amass $1 billion in investor capital. Nice. But those public stocks are like crypto's college diplomas. They may matter to your parents, but not so much to your friends who can access better crypto-native vehicles, including tokenized exchanges and indices instead. And thesis number 9, copy trading. We're all gonna make it. In the crypto markets, you usually don't really need an edge compared to traditional markets. It's more about chasing momentum and realizing early which sector might be the next hot Ponzi. Pseudonymous Twitter guys with images of apes are actually not the worst source in that regard. There are rhythms to the crypto market as well. If BTC leads, then alt season is probably right around the corner. Because people now believe this to be true, and because it makes intuitive sense to diversify down the stack, the rotation even happens more quickly and reliably these days. There is literally a path to alt season guide, and some would argue that trading narrative momentum in crypto really is as simple as strong BTC, stronger ETH, strongest small caps. In a bear market, it's the other way around. And that's it for this video. I hope you enjoyed it and took something out of it. As always, very information dense and fast paced, but I hope that's fine for you. If you enjoyed the video, then I would appreciate it if you leave a like and subscribe to the channel for further content, and then I see you next time.